Have you ever wondered how some people manage to buy property with little or no money down? It's not just about having a large bank account, it's about knowing the right strategies. Buying property traditionally requires hefty down payments, but there are many ways to break into the real estate market without draining your savings. Today, we'll cover 8 expert tips that can help you buy property with minimal or no upfront costs, even in today's market. Let's dive in. 1. Leverage home equity. One of the easiest ways to buy property with little or no money down is by using the equity in your existing home. Home equity is the difference between your property's market value and what you owe on your mortgage. If you've built up significant equity, you can use it to finance the down payment for your next property. Home equity loans, home equity lines of credit, HELOCs, or a cash-out refinance are common options to access that equity. These options allow you to borrow against your home's value, giving you the funds needed to secure a new property without touching your savings. 2. Backing into your first rental property. If you already own a home, you're in a great position to back into your first rental property. This strategy involves renting out your primary residence while purchasing a new home as your primary residence. This approach allows you to take advantage of lower mortgage rates typically reserved for primary homes. The rental income from your first home can help cover the mortgage of the new property. By doing this, you can build your real estate portfolio without needing a large down payment, as the rental income helps offset your expenses. 3. House hacking with a multifamily property. Another strategy for buying property with little money down is house hacking. This involves purchasing a multifamily property, such as a duplex, triplex, or fourplex, where you live in one unit and rent out the others. The rent from your tenants can cover your mortgage, effectively allowing you to live for free or at a lower cost. FHA loans or VA loans are excellent options for this strategy since they allow for low down payments, as little as 3.5% for FHA loans. Plus, you can use a $203K loan for rehab if the property needs renovations. 4. Partner with a co-borrower. If you don't have enough savings for a down payment, consider teaming up with a co-borrower. This could be a family member, friend, or business partner. A co-borrower helps share the financial responsibilities, including the down payment and mortgage payments. This way, you can pool resources, reduce the financial burden, and split the risks and responsibilities of managing the property. A co-borrower doesn't just bring in cash, they can also help manage the property, making it a win-win for both parties. 5. Rent-to-own agreements. If you're short on funds but still want to buy a rental property, rent-to-own agreements can be a viable option. In a rent-to-own or lease option agreement, you rent the property with the option to buy it later. Some of the rent you pay each month may be credited toward the purchase price, which helps you gradually save for the down payment while living in the property. This can be a great option if you're trying to build equity while working toward full ownership without the need for a significant down payment upfront. 6. Assume the seller's mortgage. Another creative option for buying property with little or no money down is to assume the seller's mortgage. This means you take over the seller's existing loan, including the interest rate and loan terms. If the seller's mortgage rate is low, assuming their loan can be a great deal. To qualify, you'll need to check if the mortgage has a due-on-sale clause, which could require the seller to pay off the loan upon transfer of ownership. If everything checks out, assuming the mortgage can be a smooth way to avoid a large down payment while securing a favorable loan. 7. Seller financing. In seller financing, the seller acts as the lender and you agree to make monthly payments directly to them instead of securing a loan through a bank or traditional lender. This option is ideal when the seller owns the property outright and is willing to finance the sale. Seller financing often comes with flexible terms and less red tape compared to traditional loans, which can make it easier to secure the property with little or no money down. This strategy can work well if you find a motivated seller and a good deal. 8. Use a hard money loan. Finally, hard money loans offer another alternative for purchasing property with minimal upfront costs. Hard money loans are short-term, high-interest loans typically offered by private investors or lending institutions. These loans focus more on the value of the property than on the borrower's creditworthiness, which makes it easier to secure financing even if you don't have a lot of cash up front. However, the loan terms can be less favorable, with high interest rates and short repayment periods, so it's important to have a solid plan for repaying the loan. Purchasing property with little or no money down is possible with the right strategies. From leveraging home equity to house hacking, There are multiple ways to enter the real estate market with minimal upfront costs. Partnering with a co-borrower, exploring rent-to-own agreements, or utilizing seller financing can also be smart ways to secure property without needing a large down payment. If you're looking for more creative financing options, assuming the seller's mortgage or using hard money loans might be the solution you need. If you found this video helpful, be sure to like, share, and subscribe for more real estate tips and tricks.